Jason, thanks for joining us. Could you tell us what merchants are really looking for from acquirers these days?
We're looking for a partner who can give us flexibility to offer our customers the way to pay in the way that they want to pay, and in ways that are efficient and cost effective.
And this terminology around acquirers is a kind of proxy for payment acceptance, but payment acceptance is much broader than cards these days, right? So how important are alternative payment methods to Microsoft?
Extremely important. Not that long ago, we were mainly card-based and very card-centric. In the last couple of years, we've come a long way by realizing that local payment methods are relevant, and they're growing. So we want to offer our customers the way that they choose to pay in markets that it's relevant. So in Europe, places like Germany, for example, cards are not the dominant payment method, so we have to offer alternatives. In Asia Pacific, we see wallets in particular are growing phenomenally fast. In India, there's UPI, which is growing exponentially month on month. The numbers are really, really amazing. And so we've got to be quick to market with those things, and often we can't be as quick as we would like to be ourselves. And so we rely on our partners to enable those methods for us.
And governments are pursuing different policies and stimulating different infrastructures, as you mentioned. Open banking in the UK, PSD2 in Europe, and UPI in India. UPI seems like a phenomenally powerful method of payment for merchants. Would you like to see every country develop a UPI type of switch?
Absolutely. I think the best thing about UPI for me is that it's extremely usable and easy for a consumer or the end customer. They have one handle, one identifier that regardless of what bank they going to be using or which bank the acquirer is the payment will work. And so for them, they don't have to rummage around for lots of different card numbers or remember lots of different usernames and passwords. They just have one identifier and one password to enable a payment. And the fact that it's real-time payments is also a massive bonus for a new payment method.
And we have real-time payments coming to the US market, but very different from India in as much as it's not mandated for all banks. So how do you see the market evolving in the US, and do you think we'll ever get a UPI equivalent in the US?
That's a loaded question. Forever is a long time. I think at some point we will get something that is like a UPI product. There are a number of different actors in the industry looking to enable real-time payments. So I don't think we're going to be a very, very long time away from it. It's going to be a bit of a chicken and egg situation, making the product available for merchants to consume, but making it attractive for consumers to use. And if you don't have that healthy ecosystem on both sides, it's not going to take off as quickly as it has elsewhere.
And when it comes to Europe, one of the controversial aspects of open banking and PSD2 is the customer journey driven by the strong customer authentication. Is that something that can be overcome, or is the current model of redirecting to banks really a roadblock for adoption by merchants and consumers?
I think there is upside in having a standardization. So 3DS 2.0 and redirecting to banks creates that standardization for us as merchants to adopt, and it creates familiarization for customers and consumers to get used to an experience. If they had multiple and unique different ways to authenticate depending on the merchant, you create confusion potentially. So I do think there is some value in standardization. I'm not making a judgment on whether 3DS 2.0 is the best way to do that, but it is one way. I think that if we can find alternatives and perhaps use biometrics more easily and use other methods of authentication, then banking, redirecting to a bank may not be the optimum.
Now, when we think about the services offered by the card schemes, they provide a whole layer of different services. It's the acceptance, the payment, the credit, loyalty, and the insurance. In a sense, it seems like these services are being unbundled and redelivered in different ways. I mean, for example, point of sale finance, point of purchase finance seems to be one of the fastest growing elements, these installment plans offered by fintech players. Is that something that Microsoft is engaging in?
Absolutely. So in the US, we offer installment payments for some of our more expensive consumer products, specifically hardware. But as we start bundling services together, we want to offer ways that customers can pay them off over a period of time, but also look to some of our peers in the industry where you take a plan and you buy a product over a number of months and then you can upgrade. The life cycle of hardware in particular is relatively short, and so people are upgrading the hardware quite regularly. As we've moved to a more subscription-based generation of buying and consuming products, consuming hardware, for example, as a subscription, or the service as a subscription, is something that we're looking to. And installments can play a role in that space.
So these are affordability solutions. So one question is, when you think about your objectives as a merchant and you're trying to reduce the cost of payments, increase the acceptance rates, reduce the fraud, but also sell more stuff.
Yeah.
So the question is, does affordability and selling more stuff trump these other traditional considerations like cost of payments?
Absolutely. If you're selling a big ticket item, even if the margins are relatively small, a sale is worth a lot more than perhaps just a few basis points on the cost of a payment. And creating, you mentioned accessibility earlier. So again, an expensive hardware item that you may have precluded some of your customer base because of the large ticket price. But if you can increase the customer base that's buying your product by 10-20%, then it's hugely beneficial, as well as partnerships. You can create partnerships with some of the providers of that installment plan, depending on who you're using. And you can create a good economic model that works for both, that actually benefits the consumer.
Jason, there's a lot of consolidation taking place in the payments industry. Is that a concern from a merchant's perspective in terms of reduced competition?
No, I don't think it's a concern in terms of reduced competition. One thing that does worry me is that these businesses that are being acquired because they're good. And so I hope that doesn't disrupt their business while they integrate or have management change. I think that the payments industry is growing sufficiently fast and big enough for all these players to be relevant in the market and provide good services.
Fantastic. Jason, thank you so much for sharing your insights.